Welcome to this deep dive. Today we're tackling something really impacting global economics right now. Reciprocal tariffs, specifically the recent ones coming from the U.S. And for you, our listener, particularly if you're preparing for the UPSC exams, getting a handle on this is, well, it's pretty essential.
Absolutely. It cuts across so many areas, economics, international relations. It's definitely mains and prelims relevant.
Exactly. So we're going to unpack these tariffs, what they are, their global effects, especially on Asia and India, and what kind of strategies are on the table.
And our discussion today is grounded in a very insightful recent piece from The Hindu.
Right. So the mission here is simple. Cut through the noise, give you a clear picture of what's happening and why it matters so much for India's economic path forward. Okay, let's start at the beginning. What exactly are reciprocal tariffs?
Sure. So think of them basically as a trade counterpunch. One country hits another with import taxes or tariffs. And the country that got hit responds by doing the same thing back, imposing similar taxes on goods from the first country. It's very much a you hit me, I hit you back situation using trade taxes.
Right, a tit for tat. And what's the underlying goal? Why do countries do this?
Well, the stated reasons are usually about, protecting their own industries from foreign competition.
Shielding local jobs, that sort of thing.
Precisely. Protecting jobs, trying to correct a trade imbalance they don't like. Tariffs have historically been used like this as negotiating tools, sometimes to protect infant industries.
But it feels like a risky game. Doesn't it often backfire?
Oh, absolutely. That's the big danger. Retaliation.
Yeah.
One country acts, the other retaliates, then maybe the first one escalates again.
And you get a trade war spiral.
Exactly. And that usually means higher prices for consumers because imported goods cost more. Disruptions to supply chains. Think about how globally interconnected everything is now. And ultimately, it can really put the brakes on economic growth worldwide.
It's interesting you mentioned history. Has the main purpose of tariffs shifted over time?
Yeah, that's a key point. Decades, even centuries ago, tariffs were a major source of government revenue for many countries.
Like income tax today, almost.
In some ways, yes. But now, especially for developed economies, their role is much more about leverage in trade negotiations. They're used as a strategic tool, less for the cash they bring in directly.
But they still carry those negative side effects you mentioned.
Definitely. The potential for economic damage hasn't gone away, even if the primary intent has shifted more towards strategy and leverage.
Okay, so the U.S. announces these tariffs. What happens immediately? What's the market reaction?
Well, the initial reaction was quite telling. We saw a pretty sharp drop in crude oil prices, around 14%, actually.
Wow, 14%. Why oil specifically?
Because oil prices are often seen as a kind of barometer for global economic health. A big drop like that signals that markets are anticipating a slowdown in global economic activity, largely because of these trade tensions potentially escalating. Less activity means less demand for oil.
That's a major signal. And were there other immediate worries?
Yes, beyond oil, the concerns broadened out pretty quickly. Fears about rising inflation, more pressure on those already stressed global supply chains.
Still recovering from recent years.
Exactly, and just an overall drag on global growth prospects. And it's worth noting, this kind of shock tends to hit lower-income countries the hardest.
Why is that?
They often have less financial cushion, less fiscal space, and maybe less robust institutions to weather these kinds of external economic storms. They're just more vulnerable.
Now, the article in the Hindu, it dug into the way the U.S. is calculating these tariffs, and it found some, well, significant issues.
Yes, that's a really critical part of the analysis. The formula itself is, frankly, quite simplistic.
How does it work?
They basically look at the trade deficit the U.S. has with a specific country in goods. They divide that deficit figure by the total value of U.S. exports to that country, and then they just cut that resulting percentage in half.
Seems straightforward, but you said simplistic. What's the flaw?
Well, there are a couple of big ones. First, they use this uniform elasticity rate of 0.25 for everything.
Elasticity. That's about how much demand changes when price changes, right?
Exactly. So an elasticity of 0.25 assumes that if a tariff makes an import 1% more expensive, demand for it will only drop by 0.25%.
Which sounds low.
It often is, yes. Real-world studies suggest elasticity is frequently closer to 1, meaning demand is much more responsive to price changes. People switch to alternatives or just buy less.
So the U.S. model is potentially underestimating how much trade will actually fall.
Precisely. It doesn't seem to capture the likely behavioral response from consumers and businesses very accurately.
Okay, what's the second main issue with the model?
This is huge. It completely ignores trade in services. It only looks at physical goods.
Ah, so countries that export a lot of services, tech, finance, consulting.
Exactly. Countries like, say, India with its strong IT services sector or the UK with financial services, that whole side of their trade relationship with the US isn't even considered in this calculation.
Disadvantages them, potentially, while maybe benefiting countries that happen to run a service surplus with the U.S.
Correct. It paints an incomplete picture. You could have a country with a balanced overall trade relationship, including services, but still get hit with tariffs just based on the goods deficit.
It really sounds like a one-size-fits-all approach that doesn't fit modern trade very well.
That's a good way to put it. And it does raise questions about the credibility and sort of the fairness of the policy if the calculation method itself seems flawed.
Let's shift focus to the impact on Asia, which the article highlighted. Which parts of Asia are feeling this most acutely?
The analysis points quite clearly to South Asia and Southeast Asia as being on the front lines, facing the most significant potential downsides.
Because of their reliance on exports.
Largely, yes. Many economies in these regions are heavily export-oriented, and the United States is often if not the, major market for their goods.
Are there specific countries that are particularly exposed?
Yes, the article specifically flags Vietnam and Cambodia. For Vietnam, exports heading to the U.S. make up something like 30% of their entire GDP.
30%. That's enormous.
It really is. And for Cambodia, it's about 25%. These figures just underscore how deeply dependent these economies are on that U.S. market access.
What does that dependence mean in practice when tariffs hit? Take Cambodia, for example.
Well, Cambodia has a huge garment industry. It employs over 750,000 people, mostly women. It's absolutely vital.
Yeah.
These tariffs pose a direct threat to that sector. Fewer orders from U.S. buyers could mean factory closures, widespread job losses, a really severe blow to livelihoods.
And unlike a huge economy like China, they don't have the same clout to push back, do they?
Yeah.
Exactly. Smaller economies like Vietnam and Cambodia lack the geopolitical weight and the economic scale to retaliate effectively or negotiate on an equal footing. They find themselves in a much weaker position facing these sort of asymmetrical negotiations.
Right. So let's bring it home to India. What's the potential fallout here, and what are the strategic options on the table?
Well, based on estimates cited in the article from the Global Trade Research Initiative, India could see its exports to the U.S. drop by about 6.4% if these tariffs go ahead, as described.
And in dollar terms, India exports a lot to the U.S.
It does. Based on 2024 figures, goods exports were around $89 billion. So a 6.4% drop works out to roughly $7.76 billion. That's not insignificant.
Definitely not. So faced with that possibility, what strategic paths should India be looking at? The article laid out a few key ones.
Yes, it outlined 4 main strategic pillars. First, obviously, keep talking to the U.S., continuous proactive negotiation to try and secure a balanced deal, maybe carve-outs or exemptions.
Makes sense. What's the second?
Diversification, really accelerate efforts to finalize trade agreements with other major partners, the EU, the UK, Canada, spreading the risk, essentially.
Don't put all your eggs in one basket.
Pretty much. Third, India needs to actively deepen ties with other partners, too. Think Russia, Japan, South Korea, the ASEAN bloc, the UAE. Build alternative avenues for trade and investment.
Okay, negotiation, diversification, deepening other ties. What was the fourth point?
Managing the relationship with China. This requires a careful balancing act, strategic restraint when necessary, but also continuing engagement on the economic front where it makes sense. It's complex.
It is. Now, there was a positive export note mentioned for India, wasn't there? Something about iPhones.
Yes, that's right. A significant jump, 54% increase in iPhone exports from India, which is great news. It shows growing capability in high-value manufacturing. But the article also pointed out that India's total goods exports for the fiscal year 2024-25 were basically flat, around $437 billion. So while the iPhone growth is positive, it hasn't yet translated into a broad-based surge across the entire export sector.
So it highlights the need for something more fundamental.
Exactly.
Yeah.
It underlines that these external pressures, these global shifts, really make it imperative for India to focus on deep domestic reforms.
What kind of reforms are we talking about?
Things needed to really become a global manufacturing and export hub. That means rationalizing India's own tariff structure, making it simpler and more competitive. Further simplifying the GST system, making it easier for businesses, improving trade facilitation, cutting red tape at ports, streamlining customs, and critically, enforcing quality standards rigorously so Made in India is trusted globally.
So it's not just about reacting to external policies, but building internal strength and competitiveness.
Absolutely. That's the long-term game.
Okay, let's try and wrap this up. What are the main takeaways for our listeners from this deep dive on reciprocal tariffs?
I'd say a few key things stand out. First, the sheer level of disruption these tariffs cause globally. Second, the questionable methodology behind the current U.S. calculations.
Right, it's a flawed model.
Third, the particularly harsh impact these policies can have on export-dependent Asian economies. And fourth, the critical strategic choices India now faces, both in its foreign trade policy and, crucially, in its domestic economic reforms.
It really does underscore how interconnected and, frankly, how fragile the global economy can be. Actions by one major player send ripples everywhere.
Absolutely. Policies designed for domestic aims can easily trigger wider instability, especially for those nations deeply plugged into global trade networks.
So for you, the listener, especially our UPSC aspirants, the final thought is perhaps this. Reflect on how these big shifts in global trade policy create not just challenges, but potentially opportunities too for India's economic future and its place in the world.
Yeah, it's about understanding both the risks and the potential openings.
Definitely worth digging deeper into India's trade strategies and those essential domestic reforms we talked about. It's a dynamic picture.
It certainly is. Always evolving.
Well, if this discussion helped clarify this complex but vital topic for your UPSC prep, please do give us a like, subscribe for more deep dives, and feel free to drop any further questions in the comments.
I'd love to hear from you.
And remember, this analysis was informed by that recent article in The Hindu, always a crucial source for staying on top of these developments. Thanks for joining us on the Deep Dive.